All right, welcome back, everyone. Today, we're going to peel back the layers on a really interesting story that's unfolding with Bitcoin, just beneath the surface of the charts. We're calling this one the silent accumulation.
Because, when you first glance at the price, things seem kind of quiet, almost boring, right? But the big question we have to ask is, are we missing the real story here? Is there some powerful trend building up, hidden in plain sight? Let's take a closer look.
So, as of January 10th, 2026, Bitcoin is just hovering. It's hanging out right around that $90,582 mark. On paper, it's what you'd call a sideways market, a period of calm.
And its scale, it's still absolutely massive. We're talking a market capitalization sitting comfortably over $1.8 trillion.
Now check this out. Look at the trading volume. Even with a flat price, nearly $40 billion are changing hands every single day. So this market is anything but asleep. It's active, it's busy, but it's not really going anywhere. So what's the deal?
Well, the technical charts are telling a classic story of a tug-of-war. If you look at the daily view, it seems like we're in a consolidation phase. The market is basically just absorbing all that selling from late last year and trying to find its balance. But if you zoom into the 4-hour view, it looks more like a short-term correction, just a slight pullback. So you've got two different time frames telling two slightly different stories.
The key level that everyone is watching is that $90,000 support. The price has consistently bounced right off this floor, which is a great sign. It tells us that the really intense selling pressure we saw before has eased up. Buyers are clearly stepping in at this price.
And then, on the other side, we have this ceiling at $95,000. For the bulls to really, truly take control and confirm a new upward trend, the price needs to decisively smash through that level. Until then, we're kind of stuck in this range.
So if the short-term charts are just showing us a stalemate, where do we find the real narrative? For that, we need to zoom out. We need to look at who's been doing all the selling and, more importantly, who has suddenly stopped.
And this, my friends, is the story of the long-term holders. Starting back in mid-2025, they began selling. By late 2025, that selling became a torrent. One of the most intense periods of selling we have ever seen from this group. And then, as we rolled into 2026, it just stopped. The selling pressure basically vanished into thin air.
And to put this into perspective, look at the scale of what just happened. If you compare it to previous cycles, like the sell-off back in 2018, the selling pressure from these long-term holders in 2025 was absolutely extreme. They weren't just taking a few profits. It was a massive distribution event.
So, the crucial point is, what does this all mean? Well, on-chain analysts are calling this a market reset. The players who are fearful, impatient, or maybe just looking for a quick profit, they have now officially exited the stage. A market reset is essentially a changing of the guard. It's that moment when assets move from weaker short-term hands into the hands of investors with much stronger long-term conviction. And historically, these resets are what build the foundation for the next major move up.
Now, zooming out even further, let's just take a quick look at the whole crypto space. Bitcoin is still maintaining its dominance at 58% of the total market, really acting as the anchor for everything else.
And the altcoin market? It reflects that same cautious, uncertain mood. It's a real mixed bag. You've got some up, like BNB and Tron, some down, like Ethereum and Solana. There's just no clear direction, which really shows investors are hesitant to take on any extra risk right now.
And that brings us to the market psychology. This number, 25, this is the current score on the Crypto Fear and Greed Index.
A score of 25 puts the market squarely in a state of extreme fear. And this is where the story gets really compelling. Because while the broader market is just gripped by uncertainty and pessimism, the on-chain data is showing us that the biggest, most convicted sellers have already left the building.
So let's put all these pieces together. You've got the price, trapped in a tight range. You have the long-term holders who, after a historic sell-off, have gone completely silent. This has triggered what we're calling a market reset. And all of this is happening while the general market sentiment is at rock bottom.
Which leaves us with one final, and I think pretty powerful question. When the sellers disappear, when the weak hands have all folded, and when fear is at its absolute peak, is that the exact moment the market is quietly coiling, preparing for its next explosive move? That's what the data suggests we should all be watching for.